Hey, greetings. Dr. Jeffrey Scott here. This is my weekend market update for February 9th, 2025, Super Bowl Sunday. I think the real Super Bowl for me is going to be what comes out at 6:01, the futures. Will we see a big drop down? Do we see a bounce? Do we see a yawn? I think there's a lot of questions of what we're going to see late night tonight and then in the markets on Monday. I titled today Consolidation Near All-Time Highs or Something Worse. For days I've been talking about bearish engulfing patterns, divergences at overhead resistance, and it played out pretty close to what I might have expected on Friday. But the question is there enough damage that I should think that we're going down a lot? Or is this just going to be a regular pullback? And remember, or correction, the 50s are right underneath most of those major indices. Again, my name is Jeffrey Scott. This is hgsidoc@gmail.com. If you like this and you're not a subscriber, hit the subscribe, hit the alarm. I don't get yet mailing lists, but what it does is it gives me opportunity to get in front of more eyeballs, and it lets you know when I put this out there. If you do like it, you can hit the thumbs up, and if you don't, hit the thumbs down. And constructive criticism, whether it's positive or negative, is always welcome, either via email or in the comments box. So a couple things are different today. One, I'm trying out a new microphone. I just don't like wearing the headsets. They're heavy and hot. So I bought a new microphone, so we'll see how that goes. I'm not on my boat in the Bahamas, so it won't sound as bad as it did last week. Ugh, that was horrible. And then the other thing is, I am going to change the format of the platforms that I use during these calls. I have tools in a number of different platforms. I am about to bring to market my Market MRI Pro app, and I'm going to use that a lot in the charting this session. I'll show you how it integrates so nicely with TradingView, and what else? I'll also use some of the other products that I have. If you're looking for the Wealth Charts video, don't worry about it. I still use Wealth Charts. Great program. It's got a lot of things that nobody else has, including Rob Hoffman. And that'll still be done on the Stocks and Docs page, the shorter version. So let's go ahead and let's get started. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to show you how I apply the tools of top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisors before making trades. I have tools for multiple platforms, but consider myself an independent trader. So, speaking of multiple platforms, in yellow are the two that are coming, Metastock and Market MRI Pro. Each of these programs are different. HGSI is a product that I started using maybe 15, 20 years ago. It was closely developed by the proprietor for HGSI, George Roberts, and Ian Woodward, who is my mentor, who I learned so much from. So many of the things that I use are built in. It has great scanning. You can build the market timing model because a WMA is there, and so is the Bongo. And it's got great market breadth tools, including the Hindenburg Omen. Not as customizable as some, and you can't bring in outside indicators, but I was able to get my buddy John Person's indicators programmed in for an additional fee for users. Wealth charts, that's what I usually use. This is probably the most full function product on the market, with just a couple of omissions. And it's got built-in education, great speakers that are Monday through Friday. Rob does his Wealth 365 events. I've had the honor of speaking there. Great product. You buy it on an annual lease, but for most of us, our marketplace packages are you pay once and you get it forever. Includes data, and now he's got probably the least expensive real-time futures feed of anybody I've ever used, broker-wise or trading platforms. From an indicator perspective, the dots in a single time frame bongo are standard, multi-time frame, and the scanner, high-low, and the few other things are in the marketplace, which is fee-based, one time only. The scanner is in the marketplace. You can build the market timing as I built there. Probably the one thing it's missing is it doesn't have great market breadth tools. TradeStation, I do have an all-inclusive app that includes the chart indicators, a scanner tool, both for the scanner but also the trading app scanner, which I think is an improvement. I have the market timing model built in there, and TradeStation as a broker platform has great market breadth tools. TradingView, again, the indicators are available for purchase. I do not have a scanner for TradingView. I know they brought in their scanner capabilities, but they're still not where I want them to be. The market timing model can be built with the indicators you can purchase. TradingView as a tool has great market breadth tools, including Hindenburg's, because it's an open source platform where people place things for price, for money, or for free. Metastock is, one of the granddaddies of the programs. It's in version 19, which just tells you how long it's been. I've been a customer of theirs since the DOS days. They've stepped up their education programs considerably. Lots of outside educators, similar to Wealth Charts, will create add-ons for it. So they've recently completed an app for me that's got charting indicators, scanning tools, the market timing model, and they have built-in great breadth tools, which are markedly enhanced by using my buddy Sagar Nandi's SuperiorProfit.co Q Edge tool. And then Market MRI Pro is built for me. In fact, we started this so I would have a real-time scanner because I didn't have that in Wealth Charts, for the most part, TradeStation, and certainly not TradingView. And you'll see that use. It includes all the different columns. Which is my favorite? Well, which is my favorite grandchild? You'll get the same answer. I like them all. As I mentioned before, if you're looking for Wealth Charts only, just go to the stocksanddocs.com site. I'll have something up there by 8:30-ish tomorrow morning. If you want nightly updates, and these will be using predominantly Market MRI Pro, but I use all the tools on the nightly updates. These are different than the Stocks and Docs. There's no cost, and they come out the night before. You don't have to wait till the market opens to get them. What I need you to do is just join my Google group. It's called Top Down Trader. It's free. I don't ever anticipate a charge. I will do nightly videos when I'm not traveling. I share things a lot. I had a special 3.5-hour education session for the members. You can always cancel if you don't like it. And as I said, it's free and I don't use it for soliciting. So I always like to look at the major markets and see what pattern I see, what stands out. So the first thing is when you look over 5 days, there's more red than green. And of the major indicators in yellow, the only ones that were positive and just nominally so were the NYSE and the Qs. Spiders were down 0.2, the Russell down 0.2, the NASDAQ Industrial down about 0.5%. So one message is, yeah, the markets were down, but not that much. The equal weight S&P underperformed a bit, and the equal weight Qs actually outperformed a bit. So a relatively modest movement. There were standouts to the positive and negative. Natural gas rebounded up 8% over the last 5 days. Growth, IBD 50 was up 5.3, and gold and silver did well. And on the laggard side over 5 days, oil, Bitcoin, and semiconductors, and the mags also underperformed. If we look at one-day performance, Friday was a tougher day, and you could see pretty much across the board they were negative on one-day performance on Friday. If we look at sectors and sector rotation, big sector moves. Now, isn't this interesting? On a week that the market was down, you still had more sectors up than down, led by real estate, energy, followed by technology. The laggards are some of the recent leaders. Discretionary, industrial were two of the most recent leaders. The Q Edge tool allows me to get a sense of the market at any given moment. It's a real-time tool. And let me just tell you what I see on this. It's done this morning, so you could see all the sectors were up on Friday. all the sectors were down on Friday, red, Jeff, not green. 82% of the industries were down, and 79% of the stocks were down. That's a pretty negative day. If you look at the buckets, and if you think about the Bollinger Bands, a stock or an index or sector should spend 90% of its time in between the Bollinger Bands, and maybe 5% above and 5% below. And the middle of the Bollinger Bands is actually the 20-day simple moving averages, or 20-period simple moving average. So what this tells me is we're 50-50. Half the stocks are above, half the stocks are below, and you could see we deteriorated from Thursday to Friday. Down here, it tells me where these stocks are within the Bollinger Bands, and this tool is looking at the S&P 1500, and you could see 6.8% of the stocks are below the bands. Certainly not enough to make a signal, but enough to say something is changing. Down here, you could see how the markets have deteriorated over the last 10 days. Over the month, they're still strong, so we've just started to turn around. The question is, how much further do we go, or do we bounce on Monday morning, which I'm not counting on that. Other Sagar tools, I think, add some value to me. This is the Q market breadth. We actually duplicate this to some extent in the Market MRI Pro. But just to point out what you're looking at here, in yellow, the stocks above the 50, and white, the stocks above the 200, and orange, we're in the 50s above the 200. So everything deteriorated a bit this week. You can look here at advanced decline, which is turned down. Up-down volume is turned down. And then new high, new lows, kind of neutral. This here, and I'm going to come back to the price chart, is the 3-month new high, new low, which is in the middle of the range. When it's up here, we expect a pullback. When it's down here, we expect a bounce. The light blue is small cap versus large cap. Since it's pointing to the lower right, it's favoring large caps. And sort of neutral is the growth versus value, which is surprising because I thought this week was better for growth. The other thing I wanted to point out is this candle here, which is a pretty big down candle occurring after the doji. Is that an evening star? Maybe. It's certainly a low close doji on the John Person vocabulary. This is a combo of the NYSE and the NASDAQ, so it's not just one or the other. And notice this little devil here, the skull and crossbones. We had another Hindenburg Omen fire. These are signs of potential market tops. They don't always work. Sometimes you'll get a bunch and you wonder when it's going to fire, and then it fired. 1 out of every 4 are going to lead to, or 1 out of every 4 confirms, so it'd be multiple around the same time, lead to a significant sell-off. Most lead to a more modest sell-off. But we haven't seen one since all the way back in December, so I'm paying attention. Here you could see the Hindis on the NASDAQ, and you could see neither the NASDAQ or the NYSE as their oversold areas. Here we can look at the different other underlying indexes, and you could see here that the Dow Jones, which had been holding on, actually had a distribution day on Friday, and you could see it went from overbought to neutral. Everything looks neutral. This one here, which is the NASDAQ 100, still a little bit in overbought territory, but it came down some. And notice all the reversal candles, or the big down candles that we saw on Friday. I think the market changed. The question is, for how long? Here's the market breadth tool within the Market MRI Pro. And just to call out the highlights, we're seeing on the NASDAQ, we're seeing the Hindenburg Omen, not here on the NYSE. And notice that we've got a wedge here for sure on the NASDAQ. And are we setting up with some kind of a head and shoulders up here? Notice that we failed to take out the highs on both of these from a little bit earlier. The weekly market timing model, it changed for the better. Last week, I had 3 of the weeklies were in a sell. And if you look at it, what we can see here on the weekly model is that the spiders are in a sell below the prior high, 3-week month new high low on that index, no word concerning. The Qs are in a buy. We got the green light. The diamonds turned green, so they're in a buy, and the Russell remains red. So we're neutral here, which is better than 1 positive and 3 negative. Last week, all the daily were green, and when I look at it, they're still all green. So if we look at just my timing model, you have to be careful when you have a 2 and 2 on the weekly, but it doesn't mean it's all over and go short the market. When the daily is positive, it's sort of retracement in a downtrend. So I wouldn't go all long. This is, to me, sometimes it's good to be careful. I did raise some cash, but I still have active positions. And despite the strong sell-off on Friday, I did not go short. This is another tool within the Market MRI Pro. And what it allows me to do, and every time I'll hit refresh during the day, it takes about 3 seconds to update. I elected to leave it as a refresh instead of auto update to save on bandwidth. You could see on the 1-day close, the Russell led to the downside minus 1.75, Q's 127, Diamonds 0.95, and the Spider 0.92. And the VIX here was up 3.36%. Now, here I'm looking at 1 day. I can also, in the next slide, I'll show you, look at 5 days. Other things to see here, on the new high, new lows, we trended negative. On the NASDAQ at multiple time frames, we're still positive, but with small numbers on the NYSE. If we look at 1 day change here, utilities, and these are the S&P 500, the Q Edge tool is the 1500, we could see the only thing up for me was utilities in the S&P 500 on Friday, and what was leading it? Uranium, telemedicine, China, social media, China, copper, transports. Over here, I take, similar to the Sagar tool of looking at how many of the sectors are positive, how many of the industry groups are positive, how many of the stocks are up, and where you are, how many are above or below the midline. You could see the pictures are not the same, which is why I have separately the S&P 1500, and like in Sagar's tool, all the sectors were negative. A couple of the industry groups were up. 21% of the stocks advanced in the S&P 1500, and it's at 50-50 on the midline. So a negative day on the S&P 1500. A little bit less negative, but still negative on the NASDAQ, where you had some positive industry groups and sectors a little bit more, but the stocks only 27% advanced and 47% are above, so that's a little bit weaker. And then the NYSE looks very similar to the NASDAQ. So the market was weak on Friday. If we look at the whole 5 days, the new high, new lows, and the sectors don't change. All I did here is sorted. You can see over the week, the Qs led and diamonds lagged. Everything down just a little bit as we saw earlier. Over the 5 days, what was the leadership from sectors? You can see at least a little bit over half the sectors were up. Real estate, energy, tech, financial, so a hodgepodge. The only thing that was weak was discretionary, and think things like Apple and some of the other big mover discretionary stocks. Now, one thing that I thought was different this week is for a while, the AD lines, which are in yellow, and you can see the headings of what they are, and the index in blue, we're going the right way. But look at this. The NYSE AD line has clearly diverged. Is that going to be a leading signal of a bigger sell-off? The NASDAQ 100. An interesting divergence because the AD line went higher and the stock sold off. Usually it's the other way around. Not quite on the Russell 1000, but you can see the depth of the stock sell-off and kind of a neutral on the AD line. And then the Russell 2000 and NASDAQ are both down. So a little bit of divergence is popping in at this level. Now, I don't do this often because I look at this as sort of a filter of the health of the market. And what we've done is we've created a series of moving averages around the 4 major weekly ETFs in my trading model. And I know that when the model breaks down, you'll start to see the moving averages start to cross over. And in a really bad market, you're going to break below. So we haven't even broken down into the moving averages yet. This sort of says, Jeff, relax. We're chopping here. We'll probably consolidate. There's no evidence at this point that this market's going to implode. I said at this point, I'm not saying all clear, but at this point, we're holding up pretty well. Rates in the market both fell. You can see that in white, the 10-year was down 1.79 and the 30-year was down 2.56%. Got up close to 5% and they've turned back. We'll see if they continue falling. Is there a recession in our near future? You know, this is sort of a billion-dollar question. I'd like to say no. But I'm a creature of habit, and so is the market. On the top is we have the 10-3 month, and you could see when the yield curve goes below the zero line, and you see these gray bars. Every time we got back above the zero line, we had a recession. Now, it doesn't occur at the same time, and it can be delayed. We've not been below the zero line without a recession. Over on the 10-2, similar story, and on both of them, we've recently crossed over the zero line. So based upon that, we probably do have a recession, but we don't know when. We might look to see, oh, I did it again. I put the same things on both. I usually have down here the Bank of America ICE measurement of credit tightness. It did not go up this week. And then the Philadelphia Diffusion Index, and that one was super powerful. So these things are sort of gauges to give me a hint. We will spike credit as we go into a recession. That is not happening. And we should have bad productivity if we are going into a recession, and we did not see that. Sorry about that. Breadth signals neutral. You know, the stocks above the 40 went up, stocks above the 200 went down. You can see here the 3-month new high, new low is applied by Warden across a large universe is sort of in a neutral position. Current buckets, I'm focusing on what's below because there's very few to the right. And this is a left shift where more of the stocks are below the Bollinger Bands. We have 8% below on the NYSE, 8% below on the NASDAQ. The scales are a little different, okay? Scales on the right-hand side. 10% below on the Russell 2000, and 11 on my take this morning on the S&P 1500. Now, none of those are particularly worrisome. They show the market has weakened some, and they suggest to be careful, but they haven't gone to the point of 35, 40% when I'm sitting here building a big list of stocks to buy because it's only going to go higher. Hindenburg Omens. This surprised me because I knew about the NASDAQ because we saw that in the other programs. But for it to be confirmed, you'll need another one within 31 trading days. You know, we're kind of close to these previous ones, so I think it's still in play. And then over here, the surprise was we saw 2 on the NYSE. And that means we've got a confirmed Hindenburg Omen on the NYSE, which is not a great sign for the markets. So I will be watching the new lows. Now, these are all the different groups I typically watch. In yellow are my stuff. My holdings were up a little bit, kind of a 50-50 week, like the market. The prior week's weekend review on Friday was up 1.38. If you look at the IBD world, the buys I put, my main buy list was up 1.66, but the ones I do extra filtering were up 5.5. You could see this was all above. I mean, if the S&P 500 is down here and down 0.17, and all the groups that we track for growth are up here, it tells you it was a good week for growth. And not perhaps as broad of a weakness as you may have thought after watching Monday and Friday's blow-ups. Now, this really, I thought was very interesting. If this was a stock, you'd have a big uptrend, a cup and handle and a breakout, and I'd be all over this saying this thing's going higher. Well, if that's going higher, that says great things for the markets. I built a leaders index. You'd have to go back to look at the videos of the weekend around 11/24 to see what that means. But basically, many years ago, Ian told us, hey, put together a list of the leaders in the market, no more than 2 in an industry group, and try and get a program like HGSI that will create a synthetic index. And that as long as the index hasn't broken down, your leaders are probably still working and the market goes higher. And what we found in prior runs is the leader index will break down before the market. Now, look at this. This is exactly what the market's done. It's kind of gone sideways for a while, choppy market. It broke out to a new high on Thursday. So will the leaders index, since they're a signal when the market rolls over, are they signaling the market's going higher? Know your news and earnings. And I think this is, again, another key week. All these red arrows are Fed speakers. The double red arrow is Powell. But more importantly, we've got CPI, we got PPI, and we got a bunch of other measures, retail sales, import price, etc. That CPI will be closely watched. If it comes in hot, rates will spike, markets will fall. If it comes in as predicted or lower, you might see a bounce the other way. And then, oh yeah, we're still in the midst of what I like to refer to as earnings Lollapalooza. And it looks like, we got another big earnings. And a lot of the growth stocks that I either own or follow are going to hit this week. Astera Labs, ALAB on Monday afternoon. Shopify before the open Tuesday. Super Micro, which actually looks like it's ready to run again Tuesday after the close. On Wednesday, you got Reddit, AppLovin, and Robinhood, and Dutch Brothers Coffee. Some of those names are real new names, but they're important. Datadog Thursday morning, Coinbase, Twilio, DraftKings, Airbnb Thursday afternoon, and then before the open Friday, Moderna, among others. So it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So we ebbed and flowed this week, led to small losses. This was news over the weekend of tariffs, and then tariffs and inflation on Friday. It's never a good thing when I need to temper my thoughts about next week by thinking it's dependent upon what news comes out of the White House. And again, that's the wild card here. CPI, PPI, the other important numbers that the Fed looks at. But you also got a president now who will just blurt out things. And I'm not saying they're necessarily bad things, but as we saw with the tariffs a week ago, and it's still early on Sunday, he's still got plenty of time to do it to us again. And there was some tariff mention about Europe on Friday. His comments and his executive orders right now are whipping the market. So to me, as I'll show you the failure at resistance, are we going to have a small correction here or something bigger going to happen? I'm voting for sideways consolidation. Again, stocks and docs. And really, if you like what I talk about, if you like how I apply my knowledge and my 30 years of trading experience to the markets, please consider joining my top-down trader group. We talk a little bit about stocks that I pick. I am not looking to show you that I know the biggest leaders in the market. We all know who the biggest leaders are. But on some of those really big leaders, they're not necessarily at buy points. So I'm going to look for stocks that may be setting up and may give us an opportunity to get in. And you don't have to be in the greatest stock in the market. You need to be in stocks that are trending, stocks that are breaking out from a consolidation, perhaps in the setting of a longer-term trend. And you need to ride them until they're no longer trending. And some of the stocks that I've taken over the last couple of years, SMCI, APP, Robinhood, I bought them when they were breaking out of consolidation, not when they're midway up the flagpole on a trend, because I want to get in earlier. But there are some people that want to buy the hot momentum at their peak. That's just not me, and I think my picks will reflect that. I should announce that we've confirmed Orange County. This is a meeting that will be between $300 to $500 per person for 3 days of training. It's a low budget meeting. It will be June 6th, 7th, and 8th in Santa Ana, California, close enough to the airport that they have a shuttle. And if you have information, just email me, and I'll make I'll hook you up with Greg and and David, who are running that meeting. It's their meeting, and they've been so gracious for me to come and talk to them at that meeting. I think, I used to go to that meeting as a attendee to listen to our good friends, David McMullen, George Lee, and others. And unfortunately, as I get older and older, a lot of my mentors, Ian, William O'Neill, George, Dave, and others, are no longer with us. And so it's still an opportunity to get together and talk about what they taught, what we learned from it, and keep on their legacy. Let's look at, this is in TradeStation, and I'm going to stick with this. We're going to be able to blow up my windows in Market MRI Pro, the app, probably tonight. So I to do something like that. And they're kind of teeny weeny windows, and that's why I'm going to look at this. The other reason is I just love Sagar's Q memory, which are his trend lines. So here's the S&P. First of all, we are right below a double top at all-time highs. We have now set up a new trend line here with resistance. So we're going to have a battle here between resistance on the overhead trend line, which it got very close to, if you can see a topping tail, and the 50 underneath. A breakdown of the 50, I'd be worried about coming down and testing the 580 range. Now, 580 from 600 is only about 3 or 4%, so it would not be a major pullback to pull back to here and give us another great buying opportunity. Same thing on the Qs, but the wedge is even better defined. And we came up to the top and we reversed. Do we pull back and bounce off this, or do we break down and get stopped out at one of these? Now the Q's right above the 50, which also could be resistance or support. The diamonds broke down at support as well and broke through the trend line. Hopefully the 50 is all they need to do, but if it came down here and set up a great buying opportunity at 420, it's only 5% or less than 5% away. Not that unlikely. In fact, maybe all we're doing here is a Darvas box between these two lines. The Russell, after a false breakout on Thursday above the 50, traded below her, still has support underneath. Let's look at the futures for the VIX and the dollar. Make sure I'm on daily, you can see the VIX has traded down and bounced off of support, and the dollar has traded down and bounced off support. So I've already shown you the 10-year and 30-year were down on the week. The dollar bounced on Friday. The VIX bounced on Friday. And if we look at the daily commodities and we look at the 10-year and the 30-year, they both are going to have to get above the 50. Wouldn't it be nice if that 50 is turned into resistance? But they both bounced off their lows on Friday as well. We could see that gold is just running up this trend line. Silver had a reversal with a bearish engulfing pattern on Friday. Oil is running down this trend line, and natural gas is kind of neutral. All right, let's continue on. So let me now take you into and introduce you to Market MRI Pro. Pull it up here. I went through the slides, so I'm not going to go through the timing model. We're not going to go through the ETFs for the indexes or commodities. We just looked at them. I showed you the daily briefing, which is where I looked at the buckets and the percentages, etc. When I say the buckets, I mean the slices of the sectors, industry groups. We looked at the buckets already. We looked at market breadth. One other thing that I like to look at, and I have to, again, call out and say, Wealth Charts is really what opened my eyes to these. I knew that racial charts were used by a lot of pros, and a lot of people that I learned from on YouTube and other places use ratio charts. Wealth charts made it easy, and Praveen duplicated that here. What's leading right now? I guess the big three are going to be communications, financials, and believe it or not, healthcare. If this market was going to be dropping hard this week, would we not expect real estate, utilities, and staples to be rallying? The fact they're not rallying suggests to me, and those multiple moving average charts, I'll put my bet on, maybe we come back 3 to 5% more and we pull back to those support lines. I'm not expecting a major breakdown here. Now, that's right now at Sunday, Super Bowl Sunday at 1:55 p.m. Talk to me at 6:01. And I don't think I'll revise it because we all have seen and experienced that the market sells off hard at the open and then finishes the day close to neutral. So now that I've identified that I'm probably going to be neutral in the market, I'm probably not going to go out and buy a lot of stocks. Let me just show you some of my favorite ways to buy them. Now, Wealth Scanner has some great tools. Now, Wealth Scanner will also go inside the market, and you can look at 5-minute charts, 1-minute charts, tick charts, etc. And you could see a lot on this chart here at the 5-minute charts. But what I really like about it, I like their scanners, and they've got a lot of scanners. I like the fact the heat map, something that maybe Praveen can build in for me. And let's just look at some of the major names. Meta continues to be a big leader. It had a reversal off of all-time highs, still closed up on the session. Nothing wrong there. NVIDIA bounced. I thought it might consolidate here for a while. Still got to get above the 17. You got to like that bottoming tail there. Will it go higher? Tesla's broken down. Will it get all the way to the 200 or go higher before then? Excuse me. Amazon broke down on earnings. I didn't think they were that bad. Let's see what it shows here. $1.86 versus $1, and they beat by 25%. But I think there was some concern about their forward guided numbers and whether they were a significant change. But let me tell you, I used to have by far way too much Amazon, and I used to scrutinize every word they said. And then I used it to buy my house in Santa Fe. And they always sandbag. So we'll see if it reverses anytime soon. Apple, broken down, had a reversal up here on the Friday last week, closed lower, and it's traded lower all week. Nothing good there. Microsoft, similar, nothing good there. And Google is another one that was strong, but then had a big breakdown on earnings. And let's just look at their earnings. Again, this is another really good feature in wealth charts, is how the earnings are here. Small beat, so it's, you miss the whisper number, you get punished. But what I really like is this wealth scanner. So one way of ferreting through the market of a top-down investor is I built a large group of ETFs that are sitting in this top-down indices. You have indexes, sectors, themes, and I use it to sort of ferret out what's working. So this is the bullish scan. You can go up to 850. You got one thing above 800, that sucks, and it's gold, which is defensive. And gold has broken out here. So one thing you might want to look at is gold miners. ECH is Chile, USMV is minimum volatility, e-commerce, Eurozone, and then social media is all the way down to 700. I usually like to buy things that are 800 or above. So there's not a lot of stories here. From a flame-wise, you could see that dividends are moving up, and whatever this one is moved up some. So one thing I might do in my CAT scan, this is my scanner there, is I might go and look at gold and see if anything is giving a buy signal. Remember, I'm not looking for the stock that's done the best. I'm looking for stocks that might be giving me a signal that it's okay to go long. EQX has had a nice move here. It's a cheap stock. Still going higher. Franco, Nevada. Again, stubbed its toes a bit on Friday. Still looks like it's going higher. Orla Mining, beautiful chart. Beautiful chart. Big breakout. Now, these things are all extended. Look at that high jump. And SSRM, silver. You can see this one's pulled back just a little bit. Those are all the ones that had any of the momentum signals with CJAU, Centerra Gold breaking out here. So do any of them look outstanding? Maybe this one. It's not extended. Relative strength and OBV looks great. So this is one you might want to look at. Now I can go back to the wealth scanner and just run a bearish sort. And it uses their own AI model to rank things. And 450 is the worst it can get. And all I got here is Kesho, Intelligent Structures, Retail, Oil Production, Oil Services, Services, Energy. So energy is the weak one. And, I'm not in a market that I feel like it's the right thing to short, but I might look for retracements in a downtrend and go look at energy and see if anything pops up. ARLP, one of these colon. I'm a doctor. I meant coal. We all got colons though, and you should have your colonoscopies if you haven't been getting them. A breakdown at the 50 here. You can see breakdown, momentum to the downside out of the squeeze. Look at the breakdown of relative strength and OBV. Yeah, I mean, if I was in the mood of shorting and I wanted to short a relatively cheap stock, that might be something. And then Canadian Natural Resources is already pretty down there as well, and failed at the 50 and failed at the 17, potentially shortable. Now, another way of doing it, and I really like how we built this into Market MRI Pro, and I still use wealth charts in case you're asking, is I can go into top down, and I've got a group. We start with this on the impulse. I had Praveen combine the stocks in the NYSE and the NASDAQ, and then just filter out those that are trading less than $1 or 100,000 shares. And that leaves us with a list of, take that off, 3,526 stocks. Now I can then go into top down, and I've listed the 11 sectors and then 140 or some industry groups. Now I like to avoid one-day moves, and I'd rather look at something that's longer term. So I have something called two-day momentum is how I like to sort. You could also sort by percent change if that's what you prefer. And you could see that the leader percentage-wise was communications, and I could look at that one. And I could see that in communications, there's 163 stocks. I could look at all of them, or maybe I'll just go for the top three: entertainment, content, and advertising. And then let's rank these by two-day force. It's not force, it's two-day momentum. There's more to it than the force. And then these are some of the things that come to the top. Pinterest had a big move on earnings. Is it too far gone? In my book, it probably is. Come on. Big move up here. Notice the high jump. It says only 85. Things that move like that often will trail down before the next takeout. So I might look to see if it gives us an opportunity to get into it from a flag. TKO. Now this is basing, breakout, pullback, breakout. Its high-low jump is 100. The problem is it's had a big run. MGNI. Breaking out after a sideways consolidation. That looks very interesting. I might put that in my hot list. Reddit has earnings this week. This thing has just gone crazy, Reddit. All right. Remember, this is a beta tool, so it will occasionally flake out on me. So let's go back into that. By the way, we've identified I think 8 beta testers, and they will get an email today or tomorrow. And I am planning on doing a walkthrough of the program for the beta testers on Monday at 9 o'clock Eastern Time so that it's balanced for the East and West Coast. It will be recorded for those that are beta testers. All right, so back here, let's go back to the top down. Let's go back to, let's just sort everything the way I had sorted it. Look at communication services. Let's sort it by 2-day momentum. And we were looking at MGNI. Nice breakout here. Now, I want to find it here. And notice what happened on that date. I had CPR and a momentum signal, separation of relative strength and OBV. It would have showed up on a scan on that day. Reddit, what a beautiful run. It's no high-low jump because it's an IPO. Spotify, big breakout on earnings. This is a pattern I love. Breakout, pull back to the 50, and then this breakout here. And if you look at something like APP, I'm going to show you a very similar pattern to what I just showed you. It's run into the 50. Is it getting ready to take off? It might be. Oh, anything else I like? Lionsgate, low-cost entertainment stock. Let's give it some more time. Big sell-off, sideways move. Why do I like it? It took out the 200. It had momentum, breakout, and volume. Relative strength and OBV both moved up. Low-cost stock. I think that one looks good. Opera, an AI-driven web browser. I mean, you could come in here, and I could have drawn perhaps some lines in here, and took out the lines. I like that. That would have been a great buy. That's a fresh buy, not extended. The time to have bought it was probably on this day here, but I might have looked at it and said, let it clear this, and then the next day it came back. But this is the day, this is not an unreasonable time on Friday to have bought it. So all I'm doing here is I'm going down a list of leaders in the communication group, which I chose because of the best 2-day momentum. You can see Tennessee Music. Is it trying to break out here? Took out the 200. So I can look at any sector that way. Or another thing I could do is just go back to nothing there. I can look at the industry groups and rank them by 2-day force. And let's pick the top 5. 1, 2, 3, 4, 5. Top-down traders' dream. Got 44 of them. We could start looking at them, bookings. This whole complex of travel companies looked really good. Don't like where it finished. Expedia, look at this one. Bang. That looks interesting, but it's getting extended. Look at the volume. LEU. This is one, I'm trying to remember what it does, but I liked it. I think it sells nuclear material. And this is one that looks to me to be breaking out. Look at this massive volume. Look at the relative strength in OBV. You got everything. Your PSAR reversed. You have EMS, CPR. You've got a big gap, volume, breakout of momentum. Let's take a look at fundamentals. And you could see it's not really strong on fundamentals, although it did have a drop in the amount of earnings, but it was a big surprise on earnings and revenue that might be driving it. Now, let's say, I should have tested this before, but you want to look at this in trading view. Let me make sure make sure I'm on the right one. This should open it up in trading view. Now, I looked at it the first time, and I shook my head, I go, why is there a TV? It's because I move stuff around. All right, let's change that then. I wanted to bring it up into this view. I've got to sort through LEU, Centrus Energy Corp, and there's a lot of things here, so I probably don't want to use this as my basic, but you can see all the dots, the relative strength versus a spider on daily, weekly, OBV, the volume, and you can see their earnings, surprises, etc. And they don't yet have the February one in here. That's interesting. We actually are faster than TradingView. But when you purchase the Market MRI Pro, those people who do not have the TradingView indicators will get them as well. A little bit of a discount for those that already have them. So all I did here is I went and said, let's show me the stocks that are in the top 5 industries, and I'll take a look at them. Airbnb broke above the 50, closed underneath, might be interesting. Now up here you can pick, do you want 90 days? Do you want a year to date, very few days? Or you want a year's worth of data? I kind of like the 1 year. I think I'll have to ask Praveen to make the 1 year the default. Now, that's top-down investing. We could be done. Let me show you bottoms up. Bottoms up is much more fun. Why is bottoms up much more fun? Because you can look at lots of different things and the sexy thing of the moment. But the problem with bottoms up is if the market goes down, your stocks are going down, most likely. And therefore, I focus very much on the market. But here's my 3,526 stocks. So you'll see we've done some things here. We've added a bunch of filters. So let's just go to above 500,000 shares traded and a price greater than 5. That's sort of my limits. So that 3,500 became 1,748. Now let's try some of my different signals. My favorite signal is the 2-day momentum, open. It had 2 stocks. Both of them are interesting. DQ is a beaten down solar company. You may have noticed that Chinese stocks are starting to move. Perhaps their bear market's over before ours starts. So you had a nice breakout here. You're well off the highs. You're not extended. And if I look at fundamentals, they don't look so hot except the last earnings. They come out February 26th. They had surprises. The last 2, one was pretty big. So this one was coming up. Now, what triggered the signal? 2 momentum signals in a row, which are these blue dots at the bottom. Uber we already looked at, and Uber is breaking out here. I think that looks very interesting when you pull back. Are you in an uptrend? Absolutely. Kind of sideways movement all the way back since February 2022 and breaking out here. So this is one that I think looks very compelling. And you could see it had, in the last 2 days, it's had 2 momentums, a breakout, and a volume bar. Other signals that I have, one of my indicators is a crossover system, but not a moving average crossover. It's a different type of a crossover. Yes, it has averages, but they're not price moving averages. So I call that the CPR. So let's do that. Let's find the relative time frame CPR. Hit OK. You're going to see nothing because I got to kill the K-force. And these are stocks, and we'll pick one that I know looks good. ASPI, low-cost stock. This blue dot here, right below the green line, is my CPR. If I look at the weekly, you better see that it's in a blue CPR. So what I'm looking for in this crossover system are stocks that are in a longer-term uptrend that on the shorter term switched over and signaled today. So yes, this is well off the highs. And you could probably have your heart's content figuring out what's the right trend line pattern. Whoops, don't want to do that. Don't want to do that either. Oh, he gave me some extra toys there. So I'm going to just touch the dot here and take it down. I would have no trouble to setting that as my trend line And I bet we can color it too. Oh, we can only change the size. And we can color it. Oh, that's awesome. That's new. Every day I get an update. I get so excited. I might be looking at ASPI, but let it break above this trend line, because most likely it's going to fail. Other ones that I looked at that looked good this weekend. Darling is not my kind of stock. And here's a stock, let's go to the 1 year time frame. That's been in a downtrend that's just broken out here. Look at all the blue dots. Futu. Put the 1 year, you'll see it's in more of an uptrend than it looks. Major run up here. Big pullback back to the 50, the 200-day moving average. Run up, a little bit of a pullback and a breakout. That one looks fresh and one that's reasonable right now, not extended. So you're in an EMS buy, you're a CPR buy. We know that because that's the signal we're looking at. You've got breakout and momentum. You've got relative strength moving up above its moving average, as is OBV. Let's look at the weekly relative strength. Also looks good. I think this one looks great. Futu. And then I have, let's see, anything else? Post is another one I looked at this weekend. And let's go to the 1 year. Pull back here. Look what it did on Friday. It took out the 50. So, again, I like trend lines, and I might come in here, touch that. And you could argue that somewhere in here and a breakout above that might be interesting as well. Now, the way I buy these stocks, and I think I should be clear about this, so you don't, I'm not telling you to buy things. This is education alone. I might look at this, and I'm looking to see what makes sense to me. And this is interesting because what I'm seeing is that this high was closed above. I like that. So what I might want to do is I would probably, if I was interested in this stock, okay, I would set my buy stop somewhere above the price of the stock. This is how I do it, okay? And I'm not telling you to buy it, but I usually set my buy stop just above the high of the session. And then I would look at where would I set my sell. Okay. I would look at the last 4 bars or so, and this one was 57. But the problem with this stock is it had... Hold on one sec. My superhero just wants to come in and show me something. So one of the things I talked about in my 3-hour marathon was where I put my stops. The problem with something like this, if you look at it, it had a move of 8%. Now, I don't like to risk more than 8% on a trade, and I like to put the stop someplace that makes sense. I'm just looking here to see if I can find someplace that makes sense. I mean, you could argue that it just broke out of that. So I wouldn't let it get below that, but that's getting kind of far away. I could set it halfway down. That would not be unreasonable. I could set a stop here. But the way that I trade, I won't buy Futu unless it takes out that high of the day. Now, there are other people that I know that are very smart that say, nah, I'm giving up too much. I'm going to let it pull back to a certain level, and then I'll buy it when it starts to go higher. I don't like that because I miss things. So Futu looks interesting here. And if you really want to know more of how I look at stocks and how I trade them, join Top Down Trader and message me in Top Down Trader, hey, Jeff, can I have that 3.5-hour educational program you did? And you'll see how I manage my stocks, how I use options, and you'll also see how I use Market MRI Pro. I had a few stocks that I like that we haven't covered, so let me just pull them out right now. So let me just kill out my filters. All right, the first one is Affirm, AFRM. And I do this for one of my colleagues, Simon, who I guess proved if you hold on to things long enough, they come back. Because we're going to see, he didn't buy it here. Simon bought Affirmed when it pulled back into this range. And why? Because, hey, it's got to go up, doesn't it? It's been such a great stock. Well, he was right. But it took forever. But Affirmed had just a massive day here on Friday. It's not quite extended. You could have certainly, had I been looking at it, and it was earnings. I don't like to buy a lot of things on earnings unless I have some type of a, what's the word I'm thinking of? Some type of an edge. It had its earnings come out. And by the way, I don't even trust their model. Nothing to say it's nefarious, but this is where you buy now, pay later. But apparently, according to Simon, they have a way of structuring that debt, so it's not going to come back to them. But you could see earnings had a 9% growth. They missed, but their revenue surprised. I think they raised their outlook. So Affirm looks good. Now, would I chase it here? No. What I'd love to see, all right, let me turn this off. What I'd love to see, let me see if I can get that to go away, is for it to trade down a few days, set up a bit of a flag, and then break out higher. I may not get that chance. Uber we already looked at. I mentioned SMCI. For the same reason I didn't buy Affirm going into earnings, is SMCI is also has earnings this week. SMCI is well off the lows. This drop was because of perceived fraud. Fraud is never good, but nothing seems to have come from it. They got cleared by their auditors. One of their auditors quit, and that was probably part of the problem. But look at this, it's making a move up here. I'm going to watch SMCI. Lilly, those who follow me for a while know that before it made its big Mangiano run, I gave it to my followers as something that I thought had a good chance of going higher. And only reason I felt that way, and it was back here at this gap up, was because I was using Mangiaro. Major uptrend, pullback, and now breaking out again. I have to figure out when earnings are. Notice I just click here, and it tells me earnings are 11/19, so the next one's probably in February, so coming up here. So that'll get added as a line soon. Look at their growth and revenue. They have a great weight loss drug. Are they going to re-challenge old highs? I think it looks interesting. A couple more, and then I'm going to go make I'm going to go make a tricycle for my little granddaughter. Just got dropped off from Amazon. Poppy's day is never done, but it's so rewarding. This is that Centrus Energy. You can see it breaking out here. Still think that looks good. Look at the dots. Look at the volume. We showed you that in the other program. INOD. And again, I am not showing you just the big names that everybody talks about. INOData. Whoops. This is a healthcare, actually an IT stock. Take a look at it. Uptrend, sideways consolidation, and a breakout here. Okay. LNC. Now this is a Lincoln National, and I think it was a combination of a pattern I liked, and it pays a 4.9% dividend. Big breakout from here. Not overextended. I like the dividend. A low cost, low volume stock, Victory, VCTR. Capital, this showed up on a lot of my scans. Nice sideways move and a breakout on Friday. And again, I am not putting a buy order to buy it where it opens. I want to see it take out either the high or at least the close before I would get into it. Low volume, not low cost. I think I said both. You can see less than 500,000 shares. Post we looked at in DQ. So we looked at a bunch of things. About an hour is up. I hope you like this format, and again, if you're a Wealth Charts fan, as am I, check out the stocks and docs. And, if you do like these, there's no cost. But what you can do is join my Google group. And I'm going to stop it here. I'll let it sit for a few seconds so you can read through that. And we'll see you in Stocks and Docs on Monday. And my top-down trader group, I'll see you on Monday night.